Now, for the third session of today, I'm pleased to welcome the next host, Société Générale, that we will have a discussion on the countryside of thematic investments. So that session is presented by Anusha Krishnan, fund selection specialist, and Kevin Disdero, expert in ESG.
Good afternoon. Okay. Thank you for being here this afternoon for the LSIW Investment Week, Sustainable Investment Week. My name is Kevin Disdero. I work for Société Générale Private Wealth Management. I'm here with Anusha Krishnan from Société Générale Private Bank Fund Selection Team and a specialist in thematic investment. So we are here to speak about thematic investment. I'm really happy to have the chance to share our view today, because personally I discovered thematic investment about 7-8 years ago. At the time I was doing an internship in Paris in a fund selection team in a bank. And one morning I went to a breakfast conference in a fancy restaurant in the Champs-Élysées. And that conference was organized by a French asset manager well known for their expertise thematic. And I got that interested in thematic investment that the year after I applied for internship at that company. And because for me, it made so much sense to talk about thematic more than speaking about inflation, central bank, and so on. And thematic investment can be challenging as well, and we'll try to explain why. So Anusha, can you explain us what is thematic investment about, and why we should consider it for our portfolios or our client portfolios?
Great. Thank you. I'm just going to slide deck. Perfect. So thanks. Good afternoon, all. It's a pleasure to be here. So this is the multi-billion-dollar question on what thematics is. So as we all are aware, there are certain structural trends that currently exist in our world today. And these are something that's recalibrating the definition of what we consider status quo or what we consider business as usual. So thematic investing is an avenue through which you're able to access and invest in those companies that are capturing that disruptive growth in order to invest and align with what we consider these structural trends or mega trends. The world in general has come to agreement on what these mega trends are today. So as you can see on the slide, you have resource scarcity, rapid urbanization, demographic changes, emerging global wealth, and technological disruption. These are quite self-explanatory, but what's interesting is that technology sits in the middle of all of this, because it is the new technology and its adoption that is going to dictate the pace at which these megatrends materialize. So in terms of thematic equities, what we expect from a portfolio is for it to be global, so without any restraints in which sector or which country it's investing in, and also no constraints in terms of the market cap that it's trying to access. It's unconstrained with the intention that it provides a diversification benefit to your core global equity portfolio. The idea, again, is to capture that disruptive trend, so to capture above average growth, and it is forward-looking. So why now? Disruption is very often underestimated. When you look at the tectonic shifts that happen in the world, it's usually never linear. So the idea is that you invest in something that's disruptive and kind of carry on through its steep S-curve of adoption. And when you look at the companies that you eventually will have exposure to through thematic portfolios, it will be those that give you above average growth. And the reason why we're all here in terms of sustainability alignment, thematic investing has been a very nascent asset class. It only came about around 2015 onwards. So when you look at how asset managers build these portfolios, they inherently incorporate high degree of ESG integration. And by that, I mean not just relying on market data providers, but also conducting their own extra financial analysis. In fact, the most successful thematic or the theme currently is those that are linked to sustainability, and we'll see that in a bit.
So thank you, Anusha. We understand that in thematic investment, technology can be at the center of thematics, mega trends, but thematic investment is not only about technology, and I guess the universe is much more bigger than just AI. And maybe can you tell us more about the universe?
Yes. So before I jump into this, there's always a caveat. From what you might have understood with thematic investing, it is quite subjective, which means that investors can have different ways of addressing a theme. Asset managers can have different ways of constructing a portfolio addressing the same theme. So this is our way of mapping the universe. So it's up to an investor to decide what they consider investable or not. And as you can see here, we've aligned ourselves with with the megatrends we just spoke about, which is technology, demographic changes, and environment. We've also highlighted here the different ways you could access these themes. You have active funds or long-only portfolio managers, as well as ETFs that are a passive way of accessing this asset class. The key takeaway from this slide is, and this is our interpretation, is that the areas where active managers add most value are those where it's an intersection of two or more megatrends, which means it has a diverse enough investment opportunity set for an active manager to add value by selecting investments that are addressing that theme. And that's why you can see where the three megatrends kind of overlap. You have an overwhelming presence of orange. And then the areas where we believe that passive investments add value are those where maybe the theme isn't mature enough, so there isn't enough of an opportunity set, but it is potentially a tactical play. And a passive investment addressing a small basket of stocks could be enough for you to access that particular theme. And that's, for example, in places like blockchain or metaverse or hydrogen, for example. These are areas where we believe that if you do want to access it, an ETF could be the best way to do it.
Yeah, it's an interesting graph. Personally, I'm a big fan of the millennials thematic because I find myself inside. But I guess we understand that there's a lot of thematics. The universe is vast and big. But I guess not every thematic works equal in terms of performance or demand from investor. Could you give us some insight on that?
Sure. So again, this is the universe for the European domicile funds. As you can see here, when you look at the bottom right-hand side of the page, thematic equity investment comes with a certain bias. So for those familiar with equity factor risks, thematic equity funds would normally be carrying a growth factor risk as well as a capitalization factor risk, which is they tend to be overweight the mid and small cap space. So in markets where these factors are not favorable, so for example, 2022 as highlighted there, you can see that almost all of the thematic funds underperformed the broad-based global equity benchmark, which is MSCI World. And despite it being a multi-factor way of approaching a theme, most themes tend to have an overweight or two or more sectors. So in addition to that equity style and capitalization factor risk, you could also carry sector factor risk depending on the theme that you're invested in. So for example, if you're not in the most favorable sectors, for example, year to date, which were predominantly those of technology, communication services, and consumer discretionary, you'd potentially be in double-digit red, for example, that of agriculture, which has more staples, or most of the clean energy peer group, which mostly derated because of market sentiment. But the interesting bit I wanted to highlight on this chart is despite the overwhelming red that you see on the performance graphs, you can see on the other side, which is the assets under management for all the funds within the thematic universe. And what's interesting is that despite the underperformance, thematic equities was the only equity asset class that had a net inflow in 2022, which means that there is an underlying sentiment that the fundamentals for how a theme works and choosing the stocks in relation to the theme is strong, and the market recognizes the place for thematic equities.
Yeah, it's quite surprising for investor to, even when you lose money, you still believe in the thematic, and you will, because you know it's a long-term trend, and at the end, you truly believe in, and we see it in the inflows. So what my point of view when I see this table with a lot of red performances is that you have to be selective in terms of thematic and in terms of manager. So how do you make your selection, basically?
So as I'd mentioned previously, thematics is a very subjective asset class. So you could have two products trying to address the same theme, but have very different compositions underneath. So as institutional investors, we take a lot of pain in making sure that we clearly understand the approach that's adopted and also what is under the hood for each and every thematic equity fund. So, for example, the first point that we ensure is the clarity of the theme. So if you are trying to address a specific theme, we need to understand how the asset manager is thinking about defining that theme. If there's a clear understanding of the opportunity set, and there's also a clear understanding on how they're going to recognize the underlying investments linked to that theme. So most asset managers tend to use a revenue contribution, which could be backward-looking, but they also use, for example, CapEx, which is forward-looking. So not every manager does it the same way, but again, it's a subjective way of where we put the threshold for a theme. Similarly on purity, with thematic investing, you'll hear a lot about purity. Purity is a way on how you essentially assess if a stock is linked to a theme. And some portfolio managers out there will talk about high purity ratios, which mean that the underlying investments tend to be heavily linked to the theme. There is no standardized number on where that threshold stops. Again, it changes depending on the theme, because if the theme is not as mature, you will tend to have a lower threshold just in order to capture that disruptive growth that you're trying to do within that space. So that's a key factor when looking at thematic equities. Expertise and approach is, again, as it says, because it's a nascent asset class, we have to make sure that they have the asset managers have a good understanding on what is their value add into the space. Approach is also in the sense of after defining the investable universe and after defining how they're going to address that particular theme, what is how are they going to construct that portfolio? So what are the KPIs they're going to take in order to bolster their thematic view with the fundamental view in that particular fund? So the top bit is quite subjective. It depends on each investor where they put their threshold in terms of a theme, as well as in terms of their understanding of what they want to access from it. The bottom bit, I think, should be non-negotiable, which is diversification. The idea of thematic equities is to give you something diversified to a global equity portfolio. If I have a thematic portfolio that just has all the Magnificent Seven, and then they call it sort of an AI robotics theme, that's not going to do anything when I look at it from an allocation point of view. Scalability and liquidity, again, we have to be careful. There are a lot of trendy themes out there, which might be great in terms of a narrative standpoint of view, but not in terms of an investability standpoint of view, which means, are they liquid enough for them to handle market stress? And if it's scalable and transparent enough for institutional investors to maintain their investment in the theme. And lastly is discipline. Because of the subjective nature of thematics, we need to make sure that once we have an understanding of all these points, the portfolio manager doesn't veer from what has been promised. So we need to make sure that the investment process is repeatable and the underlying portfolio has exposures as what we expect them to have, so that we can then adjust the exposure to that theme based on where we believe we are in the market cycle.
And you know, in the asset management industry, there is this $1 billion debate about whether you should go active investing versus passive investing. Is that a relevant question into thematics as well?
Yes, it's definitely a very, very relevant question because you'll see a flood of products out there in the past, maybe 8 years. You've seen the number of products quadruple almost in the thematic space. And you could have products that are active and passive trying to address the same theme. So how would you choose which product to go to? Again, our view is that if you go active, it should be for a theme that's diverse enough, so essentially supported by 2 or 3 megatrends. It needs to be something that has a relatively large sort of investable universe. So we're looking at a universe of at least 100 to 200 stocks, where an active manager can add value by picking a stock or picking the stock most related to the theme in line with their fundamental view. And how they then build on their conviction and how they weight that product. With active managers, you also have a high degree of ESG inclusion. So within the bottom environmental and impact sort of bucket, you have a lot of sustainable themes that have seen a large inflow of assets. And that's because thanks to the taxonomy, the amount of KPIs that are available, and also the engagement that asset managers are forced to do due to investors' insistence, we now know that the level of integration as well as the level of reporting on impact measures are quite are very high in terms of quality. Whereas on the passive side, passive is where it's a systematic sort of way of investing in thematic equities. So if a theme isn't broad enough and it's just quite narrow, and there are only few stocks associated to that theme, then it's best to access it through a passive product, because it's a systematic way of doing it, and the weighting scale could change depending on the product you go to, but you're guaranteed to get exposure purely to that theme and purely to those stocks that are related to the theme. ESG integration is not very high. Again, because of the quantitative nature of it, it's embedded, but it's not at the same level as the active managers. But this is where we stand on where we go active and passive. And we do believe that there is no one way to do it. I think the best way is to integrate some structural themes which are diversifying enough and which you have high conviction on through the active side, and then place some themes that are maybe more tactical, that are maybe more nuanced through passive investment, thereby bolstering sort of your conviction through the passive investments.
Yeah, I agree on that. I think as a portfolio manager point of view, you should mix and take the best of both worlds for your portfolios. So now we know about how to select the right thematics, the right manager. How can we implement it in our portfolios?
So we see 3 different ways of essentially implementing thematic equities when you look at a broader model portfolio allocation. The first one is to essentially as a conviction play. So if you have high conviction on a particular theme, then you would add it to your model portfolio, thereby ensuring that you do have access to the theme, but would also add as a diversification bucket to your broader core equity portfolio. Thematic equities also tend to have higher alpha. So in times of growth, this is, if you are looking to capture that excess growth, this is a good way to essentially add that into your broader portfolio. The second way is maybe proxy for global equities. So thematic equities are global in nature, could have multiple sector allocations, but a lot of investors have actually started using the broader thematic equities as proxy for global equities, or maybe using 2 or more thematic plays and building a proxy for global equities in their model portfolio. This again allows them to use multiple themes, but also allows them to gives them a different growth engine compared to their traditional benchmarks or traditional allocations, which tend to be quite regional. And the last one is dynamic overlay. So this speaks to portfolio management, but being more active and tactical. So here we have seen investors using multi-thematic portfolio or fund of funds, using both active and passive strategies to ensure that they have access to the right themes, but also actively playing on the weights so that they don't essentially lose, as you saw, because of certain biases that thematic equities tend to have, they don't lose in the downside.
Thank you, Anusha. I think before we take some question, we'll shift to the conclusion.
Perfect. So I think repeating a bit of what everyone's already said, but we do believe thematic equities are here to stay. This is not us talking, this is the assets in the broader products and the asset class. But what we always try to reiterate is to not forget the fundamentals. You've seen that thematic equities tend to have certain biases that they carry, either in terms of style, risk, in terms of volatility, in terms of how they behave in different market cycles. And it's important to understand and look under the hood on what really each product is investing into and what each theme is trying to do, and selecting those products that would best suit your portfolio needs. And lastly,
Yeah, I totally agree with you on that.
Yeah. And lastly, again, being active on thematics. I mean, there are certain themes, and you would have seen on the slide before, but when you look at performance, maybe since 2019, there are some themes that are outperformed MSCI World by double digits, which means that there are structural plays that will pay off over the long run. So we need to include those in our portfolios today, but we need to be cognizant of the biases and the risk or the downside risk they carry. And in addition, tactical calls can always help when you do believe there's a sudden upswing in a particular theme or trend. For example, luxury worked for the first bit of the year, but isn't now. So it's hard to obviously time the market, but this is one way to essentially ensure that you're able to integrate thematics into your broader portfolio.
Yes, and I think we will finish on this word that maybe thematic investment can make sense for your investor, even for yourself. But maybe more than in other thematic, in other investment, you should be selective because for the same thematic, you could find several asset managers doing the same thematic, but doing several different strategies. And the strategy can be very, very different, especially for new thematics, for example, biodiversity, which is still a niche or not really, we don't have a fine definition for it yet. So be selective and invest in thematics. If you have some question, maybe?
Thank you. Thank you to Anusha and Kevin and to Société Générale. So, does anyone have a question?
Yeah, just one quick question on the portfolio. Let's say you already have your thematic and you target to a fund or an ETF, and it just comes down to this deciding if it's a fund or an ETF. Would you rather take the ETF if the both are very similar on your target?
So
would you, if you have the investment and the fund is either a fund or an ETF?
Yeah. So I think I get your question. There are certain risks with ETF, because with active managers, what we have seen, at least with ETFs, that they tend to have a slightly higher beta when compared to active managers, since active managers, as the market moves, they're very cognizant of the kind of risk that their theme and the value chain of their theme carries. So they try to ensure that, to the largest extent, they can reduce that downside risk. Whereas with an ETF, because they have a very strict sort of rules-based approach, most of the time based on market cap as well in terms of their weighting, what you normally tend to see is that when there are downturns in the market, they would tend to lose more on average than active managers. So if we were to choose between, say, for a theme between an active manager and an ETF, the first thing we would do is try to see what the theme is trying to address and what the underlying investments are. if we do believe that the active manager adds value by being selective rather than just investing in the entire investment universe for the theme, then we would definitely go active because it gives us that risk-adjusted returns as well, which is important. Whereas there are times, for example, where you could have hydrogen is a great example, where you have active managers out there and you also have ETFs out there. But is there a large enough investable universe for an active manager to add value in the hydrogen value chain in terms of just accessing that purity today? No, maybe tomorrow, but not today. So we wouldn't pay that extra fee just to get an exposure, which we can access through an ETF as well. But I think what's important to understand is that no two approaches are the same. Risk is different in each vehicle. When I say risk, it doesn't mean it's a bad thing. It's just that you need to be cognizant of it when you're selecting the theme and then the product.
Thank you.
Cheers.
Hi, I do have a question regarding the thematics, which is obviously broad, as we saw in your list. Which would be the ones you would focus on right now?
I was expecting that question. So as we are in the sustainable event as well, the reason why events like this are also big successes because sustainability is a massive theme today, even within the thematic equity space. So things, and if I can maybe just go back and show you. Yeah, so things within that bottom half, which is the environment and impact. So you can see the overlap between that and sort of technology, demographic changes, and then just the broad mega trends as well. But anything in terms of clean energy, climate change, as well as environmental opportunities, these are areas that are quite mature, which means that here you have active managers who know exactly how to choose an investment because the KPIs are quite clearly defined, either, again, thanks to taxonomies or thanks to broader label restrictions, etc. So and as investors, it's easy for us to understand their approach in investing and also understand the underlying investments in terms of what is their runway to growth and what is the fundamentals and understand sort of the disruptive nature of that. So I think this bit is definitely structural. This is also being bolstered by regulation. So the US had, passed 3 regulatory acts in support of sort of increased investment into either the EV value chain or more clean energy and clean tech solutions. And EU as well has the Green Deal. So these regulatory changes are also bolstering additional investment into the space. So this is definitely structural. When you look at it from a portfolio point of view and a performance point of view, it hasn't done well recently because of the biases it has. But that doesn't mean that it doesn't have a big runway to growth. So for us, this is definitely a structural trend that's here to stay. It's just a matter of time.
Yeah, and personally, I would like to look at something around technology. For example, something around the AI. I think AI will bring so much boost in productivity in the economy. For example, our speech could have been written by ChatGPT in 2 minutes with a couple of questions. And I think we'll really be there to stay as well.
Okay. Thank you again, Anusha and
Thank you.
Kevin
Thank you.
and Société Générale for hosting the session.